There have been a lot of statements being made and discussions in the public about mutual fund managers holding cash and keeping it on the sidelines, right? Some people have asked, why do you not deploy it? Ultimately, I'm giving you funds to deploy and to invest. But if the mutual fund managers felt that this is not fitting my, my book of valuations, they have chosen to sit on the sidelines. What is your opinion on that?
So as long as you disclose to the customer what your strategy is, I think both sides have equal points.
Merit. Yeah.
We believe that we are not going to take cash call because my partner, my mutual fund distributor, my advisor, they are taking asset allocation call. Now, if Alex advisor has told him to put 50% in equity and I take another 20% cash call, you come down to 40%, not 50%, then your asset allocation goes for a toss. But at the same time, if there is a fund manager which has taken a cash call and he has communicated it, then you know how to price that into your asset allocation. More importantly, for a common man, there are products like asset allocation fund, balance advantage fund, and equity saving scheme, where we are taking allocation call between debt, equity, and in some funds, precious metal. So you take a call based on the disclosure and philosophy of the fund house. Both will sound appropriate at different point of time. In a rising market, not taking cash call will work for you. In a falling market, taking cash call will work for you.
Exactly. So you want to add to that?
No, we are a fully invested fund by mandate. We believe, like Nilesh Bhai say, asset allocation happens at the distributor advisors end or at the investors end. You're giving us money to buy an asset class, we will buy the asset class. And I think at any points of time, there are 60, 70 good stocks to buy. Now, taking cash call, like Nilesh Bhai say, each to his own, but is timing the market. If you look at the two instances, one is 2008, post that, people who went into the cash were actually the laggards. Post-COVID, since it didn't give us a chance, all of us were invested. The entire industry caught the enter of the market. I mean, catching it on the cash side, we believe is not our forte. So better be fully invested.
Ashish?
Yeah, so you should not second guess. I'm more with Nilesh Bhai's rationale, which is that if somebody has, let's not assume that people are dumb.
No, of course.
If they want to buy a balance advantage fund, they could have bought a balance advantage fund.
Yeah.
Now, I am an equity manager. You land up on my table, I am supposed to deploy money in equity. So what we believe is that market is always fairly valued. If you want to beat the market, you need to have a relatively better portfolio compared to what the market is showing. So I'll tell you, it's a joke, lighter note, okay? No disrespect to anybody, but just a joke. Tell me, what is the best way to defeat Mr. Vishwanathan Anand?
Be a grandmaster yourself.
No, you don't play chess with him.
Okay. Yeah, if you can't beat,
you challenge
in this
him
case, you can't join him.
Yeah, you challenge him to table tennis or something.
Yeah.
Right? So you agree that's not the way to defeat him? So the way to defeat the market is not by going out of the market.
I assume you are talking about playing chess.
No, so now talk about the market. If I want to, an equity manager is supposed to beat the market by being in equity.
Yeah.
And doing a relative job. An equity manager is not supposed to beat the equity market by saying, I choose not to be in equity.
That's a fair point.
So it's not something, so you're supposed to beat the market by having superior stock selection on a relative basis. Yeah. That's how you beat the benchmark. You don't take asset allocation calls. That's the key part.